Alrighty. So in today's video, we are going to be talking about the 4 best index ETFs for trading iron condors, right? So this is suitable for you if you're just starting out in trading options, or if you have never traded iron condors before and you want to get started in trading iron condors, then you can definitely use these 4 index ETFs I'm about to share with you. Now, before we actually get into the index ETFs that you can trade, the very first thing I want to share with you is why we want to actually choose index ETFs instead of individual stocks when we're trading the Iron Condor. And this is pretty important, right? So I'm going to share with you a number of reasons why. And the very first reason is that index ETFs tend to be less volatile than individual stocks. And this is a very, very important difference between index ETFs and stocks, because for Iron Condors, what we want is for the underlying to actually stay within our profit zone, right? So if we have an Iron Condor, we have a call spread at the top. All right, if you're not very familiar with what the Iron Condor is, it's basically just a bear call spread plus a bull put spread, right? So at the bottom down here, you have your put spread, right? Some people call it the put credit spread. And then at the top, you have your call credit spread, right? So when these two combine, you actually have the Iron Condor. So your profit zone is somewhere in the middle, right? So if you want to be profitable in this trade or for putting on the Iron Condor, then you want the price to actually stay within this profit zone down here, right? So this is the profit zone. So as much as possible, when we're choosing an underlying, we do not want the underlying to move too much, right? We don't want it to move far to, to test either our call spread or to our put side as much as possible. So in this case, you can see in this graph down here, this is a study done by the Tasty Trade team, right? They compared the ETFs versus the stocks in terms of their movement, right? So as you can see, in the one shaded in blue, you can see that the index ETF, right, the movement is actually much more muted, right? It stays more within the zone compared to individual stocks, right? As you can see, stocks down here, you see the standard deviation move is actually much bigger, right? So let me just put the word stocks down here, and up there is ETF. So if you were to compare this two, which do you think is much more suitable for us to use when we're trading the Iron Condor, where we want the underlying to actually stay in within, the zone, doesn't move that much? Well, then obviously it's going to be the ETFs, right? So that is the first and one of the most important reason why when we are choosing, underlyings to trade for Iron Condors, we prefer to go for index ETFs than individual stocks. Now, the next reason why we want to choose index ETFs is because index ETFs aren't as sensitive to earnings compared to individual stocks, right? So as you can see down here, this is of Apple. Let me just give you an example of Apple. So Apple on this day, as you can see, it has gapped down pretty considerably, right? So this is when it released its earnings. So a lot of time when the earnings come out, the stock can gap up or down pretty strongly, right? So if you were to trade the Iron Condor here, this is definitely not an ideal situation for you. Now let's compare to the index ETF, right? So this index ETF is the XLK. So XLK is the Spiders Technology Sector Index ETF. And what you'll notice is that the movement on the very same day is actually so much different compared to Apple stock. Now you might be wondering, what is XLK, right? So XLK actually holds a number of tech stocks, and one of the biggest holdings is actually Apple. So as you can see down here, this shows the top 10 holdings of XLK, right? This index ETF, and Apple is at number 2, right? At 21.84%. So this is a pretty significant, a percentage of this whole ETF, because it's like the top 2, and you can see everything else below that is about 5% and odd, right? So even though this actually holds, quite a big percentage of this index ETF, the movement is actually not that big, right? You can see that Apple gaps down, but then for XLK, the movement seems as though it's like any other ordinary day. So that is one of the reasons why we also want to choose index ETFs, because we are not really bothered by earnings. So if you have an Iron Condor on Apple, you have to be worried about the earnings release date. But whereas when you trade the index ETF, you don't have to bother, right? If you see a setup that, you think is good for the Iron Condor, you can just put it on. right? So this is the second reason why we're choosing index ETFs as opposed to individual stocks. Now, the third reason is that index ETFs actually have a wider selection of strikes, right? So if you were to compare individual stocks, so for example, for this, I used the example of CRM because I had a subscriber that actually told me that they had an Iron Condor on CRM and it has really went way past, one of their short strikes, right? It went so far way past that they are probably at the max loss right now. So if you were to take a look at this option chain down here, what you will notice is that first thing, there's only 5-point wide strike differences, right? If you were to take a look at the money strikes, there's 250 and the next one is 255 on the top and the one at the bottom is 245. So that's 5-point wide. On top of that, if you take a look at the delta, you notice that the delta is not that near to each other. It's quite far apart, right? You have a 15 delta, the next one is 20 delta, then 27 delta. So they're about like 5 to 7 deltas apart, right? On the call side, it's even more dramatic, right? You can see that there's a 10-point difference from 255 to 260, and then 8 points different, or rather 8 delta difference from 260 to 265. So why does this pose a problem? Well, this poses a problem because when we are constructing the Iron Condor, delta actually plays a very big part in our construction, right? So most of the time, let's say, for example, if you're going for a neutral Iron Condor, you want to go somewhere within around 16 to 20 deltas when you're constructing the short strike. So let's say on the put side, you want to find something maybe like 18 deltas, but you can't find one, right? You have to go for either 15 deltas or 20 deltas. But what about on the call side, right? If you take a look at the call side down here, if you want to go for something like 18 or 20 deltas, you can't, right? You have to jump to either 16 delta or 23 delta. And what they will affect is actually the kind of premium that you'll receive and also, your prop, right? Which is the probability of profit. Now, what about index ETFs? So this is of SPY. As you can see, SPY is much more expensive than CRM, right? SPY is $400 over, whereas CRM is about $250. But despite being even higher priced, you notice that the strike differences is 1 point. So there are so many strikes for you to choose from. And if you were to take a look at the delta difference, it's so much closer to each other as well, right? There are about only 2 delta difference from each other. So on the call side, also same thing, about 1 to 2 delta difference from each other. And this is where you have more flexibility in the way you actually construct your Iron Condor, right? So these are the reasons why we want to choose index ETFs over individual stocks. Now, let's get into this selection of index ETFs. And a lot of people have been asking me, so Davis, which index ETFs do you think are good to actually, trade options or to trade Iron Condor specifically? So one thing to understand is that although we have been talking that, index ETFs is the preference over individual stocks when we are choosing them, right, in terms of trading our strategies. But the thing is that not all index ETFs are actually created equal. That means to say there are certain index ETFs you do not want to trade at all. So let's get to the point. Which index ETF should you trade your Iron Condors on? So I'm going to give you 4 of them. And the very first one is none other than SPY, right? SPY is the most popular index ETF, probably the most widely traded one in the world, right? Has the most highest volume, most liquid one. And SPY is the S&P 500 index ETF. So for those of you who are new to trading options or maybe even to the investing or trading world, then this is the one that most people default to trade right at the start. So why trade the Iron Condor on SPY? Right, the very first reason is because it's extremely liquid and it's a highly traded index ETF. Now, next and very important one is that statistics have shown that the realized move is smaller than the expected move. So this is very important to understand, guys, because when we are trading Iron Condor, what we're actually doing is that we're trading the expected move. Now, if you're not sure what the expected move is, I've already created a video on it. Just go to my channel, right? The title is the #1 secret to becoming consistently profitable. So there I detail exactly what is expected move and how we can use it as an edge when we're trading options, right? So the key thing to understand is that for our Iron Condors to be net profitable in the long term, to have an edge, the realized move, right? That means the actual move in the market has to be lesser than the expected move. So the expected move is pretty much the theoretical price that is being given, by the options pricing model. So if you can have the realized move is lesser than the expected move on the underlying, then you know that we have an edge when we're trading the expected move with strategies such as the Iron Condor. Okay, so as you can see down here, SPY, this is again a study done by the Tasty Trade team, and they have shown that regardless of the volatility, you can see that the realized move is lesser than the expected move in all instances, right? So some people have mentioned that, hey, the index ETF do not have that high of a volatility, so maybe we don't have that much of an edge. But if you notice down here, even during times of very low volatility, what's important to understand is that your realized move is still lesser than the expected move. As long as that is the case, regardless, even though if you get lesser premium in the long term, you still can become net profitable. Now, more importantly, studies have already proven that the Iron Condor is profitable on SPY in the long term. By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. Right, again, this is a study done by the Tasty Trade team. As you can see down here, what they've done is that they put on a 20 delta Iron Condor, which is $10 wide, right? What does it mean by 20 delta? That means your short call and your short put, all right, down here, this is 20 deltas, right? So they went for the 20 delta short strikes, and then you have $10 wide on your wings, right? So that means from here to here is $10 wide. Same thing as the other side as well. Okay, so what they did is that they pretty much just put on this Iron Condor, and then they have 2 different management style, right? They have one where they just get out of expiration, right? They hold it all the way to expiration and then put it on again after that. And the other one is at 21 DTE. That means once there's 21 days to expiration left, they close out the trade and then they put on another Iron Condor. All right, so they just do this continuously. And as you can see, in both cases, they are actually profitable. Although, holding to expiration, towards 2011 onwards, you pretty much have, not too good of a performance, right? So that is why when it comes to trading the Iron Condor, we want to manage them at 21 DTE. Basically, it's just to exit our trade at 21 DTE. Now, the key word down here I want to emphasize on is in the long term, right? Because a lot of people straight away see this chart and graph and thinking, hey, it's going to be profitable. And they jump into trading, this Iron Condor without really understanding this chart, right? Because they think that, hey, every day is going to be profitable or every month is going to be profitable. But what they don't realize is that there'll be times where you could go through a drawdown, right? Some people go through, a losing streak of maybe 3 trades and they think that the Iron Condor doesn't work. But if you were to really just zoom in into this chart down here, you will notice that there are times where there are drawdowns, right? You can see that there are drawdowns at quite a number of times. Then these are the times where when you put on the Iron Condor, you're going to lose. And it's possible that you're going to lose multiple trades in a row, right? Because the conditions are just not suitable at that point of time when you're putting on the Iron Condor, or the market have just, bigger movement than usual, right? Maybe it just exceed the expected move. So as you can see down here in 2009, there's a period of time whereby, if you were to put on the trade or you got into the Iron Condor during those times, you could have lost money. It took a while before you got it back. Same as 2011, 2013, even 2016 and 2017. Towards the end, right? But what you need to understand, this is the long term, right? So if you get into a point where you started to trade the Iron Condor and you realize that, hey, you've been losing, a few trades in a row, just realize that this is all part and parcel of trading, right? If you go and listen to other people, YouTube videos where they say that, you cannot lose money trading Iron Condors, then I would be very wary of them, because every strategy you put on always has some kind of risk. So the most important thing to understand down here is that when you take a look at this chart down here, it says the average realized move and the average expected move. Average just means it's everything add up together divided the number of instances, which means to say there are certain times where the price underlying can actually exceed the expected move. So when you aggregate them all together in the long term, that's when the average realized move will be lesser than the expected move, which means to say you do expect such kind of drawdowns from time to time. So that is why very important when you're trading the Iron Condor along with any other strategy, you want to look at the long-term profitability rather than just the next few trades, right? So this is one thing that I always mention, always look at the next 100 trades instead of the next, 3 to 10 trades. Now, the next index ETF that I think is really good for trading the Iron Condor is the IWM. So the IWM is the Russell 2000 Index ETF. So why trade the Iron Condor on IWM? Well, same thing, it is also very liquid and highly traded, and it is lower priced than SPY, right? Which means you can actually construct a less capital intensive Iron Condor, right? That's with dynamic wings, or a relatively less riskier Iron Condor with fixed wings. So here's exactly what I mean. Right, so let's just take a look at the dynamics wings right now. So dynamic wings, basically what it means is that when you're constructing the long side of your Iron Condor, you're looking at delta instead of dollar points, right? So let's say, for example, we have an Iron Condor structure down here. All right, so this is for the call side, and then you have for the put side. All right, so down here you can see the example used by the Tasty Trade team is that they're using the 16 delta options, right? So see, this is 16 delta for the short call and for the short put. Now, what about the long put and for the long call? So this is where instead of, usually what most people do is that they find a $5 wide, right? Either $5 wide or $10 wide kind of wings. Instead, this time, what you're going to do is by looking at the delta. So let's just focus at the 10 delta wings. So what it means is that you go all the way to the 10 delta on both sides, and that's where you place your wings, right? So how much risk is that? It really depends on the volatility at that point in time, right? If the volatility is high, then the 10 delta wing could be quite far apart, right? But if when the volatility is low, then the 10 delta wing will probably be nearer to where the 16 delta is. So this all really depends on, the underlying volatility. So basically what this means is that you're using the long wings, right? You're defining them by using delta. So as you can see down here, this is a study done by the Tasty Trade team, and they measured all different types of wings, right? They tested the different kind of wings with the 16 delta short strikes. So as you can see, in all cases, they are actually all net profitable. So this is the average P&L, right? Which means to say, as you can see, it's a positive number. That means it is positive in the long term overall. Now, so why is this less capital intensive? So let's take a look at the option chain to understand this a little bit better. So as you can see down here, this is of SPY. You can see that we have the short option down here at 16 delta, and we have the long option where we define the wings at 10 delta. So this is only on the put side, right? So I'll just show the put side because the call side is going to be similar. So as you can see down here, if you reach to the 10 delta, it's going to be $10 wide, which means to say your Iron Condor risk is roughly going to be, about $1,000 less the credit that you receive for, this structure for this Iron Condor. So it should be roughly around $800 to $900 risk, depending on how much credit you can get, right? So this is for SPY. Now, what about for IWM? Now, you notice for IWM, if you were to use the same delta, 16 and 10 deltas, it's only $5 wide, which means to say your risk for this trade is less than $500, right? Once you minus off the credit you receive for putting on this structure. So which means to say if you have a smaller starting capital, then you might want to consider going for the IWM instead of the SPY. And let's say, for example, you have a bigger capital where, you're able to risk about $1,000 per trade, then this is where, you could choose to go with the SPY, right? So that is why I say it's less capital intensive when it comes to the dynamic wings. Now, what about for fixed wings? That means you have a fixed dollar wing, right? Either $5 or $10. It is actually less riskier when you use it on the IWM. Why? So let's take a look at the SPY down here. So again, the SPY, we go for the 16 delta and we go $5 wings. So if we go $5 wings, will be the 440 strike. And you notice it is at the 13 deltas. Whereas for, for the IWM at 175, which is $5 away, it is at 10 delta. So delta actually gives us also an indication of the likelihood of it being in the money at expiration. Right, so for example, a 13 delta long win just means that at expiration, there's a 13% chance that this will be in the money. Whereas for IWM, right, the same $5 wide away strike is only 10 deltas. That means there's only 10% chance that it's going to be in the money, right? Slight difference, but as you can see from here, it's slightly less riskier on the IWM compared to the SPY, right? So that is one of the another reason why you might want to consider choosing IWM over SPY when you're just starting out. Now, the final reason, and most importantly, is that statistics have also shown that the realized move is smaller than the expected move, right? This is the whole reason why we can have an edge when we are trading the Iron Condor. So that's also one of the reasons why I generally do not like to trade individual stocks when it comes to trading the Iron Condor strategy, is because most of the time, right, the realized move can be bigger than expected move, especially when the earnings come or when there's, individual stock news, like for example, maybe they have a bad product launch, or maybe, the CEO, something happened to him, there's going to be a big adverse movement where it's going to affect, the price movement. It's going to most likely have a very big gap up or down. All right. Now, you might be asking this question right now after I've just shared with you these two index ETF. But Davis, I'm afraid of getting assigned if my Iron Condor is in the money, right? So this is one of the biggest fears that many people have, is that their Iron Condors get in the money and they're afraid of getting assigned, right? That means if you're getting assigned, if you get assigned on the call side, you're going to be short 100 shares of the underlying, or if you're assigned on your short put side, you're going to be long 100 shares. And this is going to have margin call if you do not have, sufficient funds to actually, buy those 100 shares or short those 100 shares. So this is where the fear that a lot of people come. So first of all, if you actually get assigned, please go ahead to take a look at my video. I already have a video which I've already created called the Iron Condor Reversal Strategy, where I just share with you exactly what to do if you're assigned. But second of all, if you're totally afraid of getting assigned at all in the first place and you do not even want to have this early assignment, then don't worry, I got your back. Then you want to trade these two underlyings instead, and that is the XSP. All right, so the XSP is actually a cash settled index options, and it's essentially the cash settled version of SPY, right? It's the mini SPX index options, which is the same size as SPY, right? If you notice on the left hand side, this is SPY, on the right hand side, it is XSP, and you notice that the price movement is virtually the same, right? They're actually exactly the same. The only difference is that one is European options, which is XSP. That means you do not get early assignment, right? And it's cash settled, whereas for SPY is American options, right? The other difference is that, the price difference is just, by maybe $1 or $2 away, right? As you can see on the SPY is about 467, whereas on the XSP about 469, right? But it's not that much difference. So why trade Iron Condors on XSP? So first of all, it is cash settled, which means that there is no chance of you getting assigned shares. Hence, there's no need for you to worry about getting into a margin call. So this really helps out a lot of people in terms of their fear of getting assigned, because there's no way you can get assigned shares on XSP. Now, next, there's no early assignment, right? You can hold all the way to expiration if you choose to. So XSP is on the European style option, which means to say the buyer of that option can only choose to exercise the option at expiration. They cannot exercise it before that, even though it's in the money, right? This is unlike the American style, which is on individual stocks and index ETFs, whereby if it's in the money, they have the option to actually just exercise it at any time they want, right? But for XSP, no such thing. So again, no need to worry about early assignment. And if you hold to expiration, basically the broker will just settle the P&L in cash, right? So again, you do not have to worry about any share assignment, because that does not happen. So people have asked me before, what actually happens at expiration, right? Let's say, for example, if you lost money. If you lost money, basically the broker will just settle any P&L in cash, right? So you will just take a look at your cash side. And if you lost money, right, basically the cash will be taken out of the account. And if you have profitable, the credit will just stay there, right? Or if you have just, maybe 50% profit, the broker will just remove like 50% of the credit which they gave you right at the start, right? So basically it's all settled in your cash account. So essentially, it's the same as SPY with slightly wider bid and ask spread and slight price difference, but for the most part, it's essentially the same. So if you're worried about getting assigned, just trade the Iron Condor on XSP. Now, the next one is MRAT. So what is MRAT? So MRAT is essentially the cash settled version of the IWM. So for XSP is the cash settled version of SPY, MRAT is the cash settled version of IWM, and it's the mini RAT index options, which is the same size as IWM. As you can see, the price movement is exactly the same, right? There's not much difference in terms of the price movement. So why trade Iron Condors on MRAT? Well, first of all, it is cash settled, which means that there is no chance of you getting assigned shares, hence no need to worry about margin call. Same thing. Again, same thing. No early assignment, right? You can hold all the way to expiration if you choose to. And if you hold to expiration, the broker will settle the P&L in cash as well. And essentially the same as IWM with slightly wider bid and ask spread and slight price difference, which doesn't make too big of a difference when you're trading it. And it is lower priced than XSP, which means you can construct a less capital intensive Iron Condor with dynamic wings, or a relatively less riskier Iron Condor with fixed wings. So basically, it just means to say that if you have a smaller capital, if you're just starting out, you want lesser risk, then just go for the MRAT. Okay, so now how do you trade the Iron Condor on them? And it's a very good question, and I've actually addressed this in another video of mine which I've already created. It's called the $10,000 Iron Condor trading plan, which I give you, a very step-by-step guide. I share with you, all the steps from beginning all the way towards the end, how you're going to construct them, how you're going to trade them, and how you're going to manage them, how you're going to exit them. All right, so if you ever watched that video, go ahead and watch that video. All right, so these are the 4 best stocks for trading Iron Condors: SPY, IWM, and if you're afraid of assignment, go for XSP or the MRAT. By the way, if you like this video, then you're absolutely going to love this next video which I have for you. So go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen, and you'll be able to get it for free. All right, I will see you in the next video.